today we're talking about Amazon and why I believe that Amazon's a good purchase. We'll split this discussion into three parts. The first, obviously, we'll talk about the earnings results. The second, I want to talk about why AWS is going to be one of the major drivers for growth for Amazon in the next couple of quarters. And thirdly, we'll discuss about the trend, that is the AI investments and the spendings on AI that most of these companies have come out with as forward guidance. But just to kickstart things, discussing the earnings results. The earnings results came out on the 31st of October. The share price got quite a bump that day, but it's already up 12% this week. Let me just share my screen. Give me 1 second. All right. So looking at Amazon, is currently trading at $208. At the 52-week high is around 212. It's very close to the 52 high mark. Again, as I said, the earnings was on the 31st. YTD returns at 37.01% as compared to an S&P 500 return of 26%. So good for Amazon. They're doing better than the S&P 500. If we talk about the results as such, the EPS for this quarter was 1.43 versus an estimate of 1.14. Really good numbers. Revenue also at 158.9 billion, which is an 11% year-on-year growth from 143 billion in the third quarter of 2023. The estimate for this quarter was 157, so it just beat the estimate by $1 billion. But going back to the point that we discussed last week, even $1 billion at the scale that Amazon, Google, all these big companies operate, even $1 billion is a huge number. It's already surged 30% since the summer. It is the fourth largest company in terms of market cap, just behind Nvidia, Apple, and Microsoft. So obviously, any kind of changes in the prices for Amazon fluctuates the S&P 500 as well. If we talk about the sales numbers, very interesting here. North America sales increased 9%. This is their bread and butter, basically the North American online sales. The international segment sales increased 12%. This is an area where I really find that Amazon's not doing enough. There's obviously room for improvement, and I'll explain why. But the primary main player for Amazon is AWS. The AWS segment sales increased 19% year on year, which makes it the highest segment increase in terms of sales. The operating cash flow was up 57%, outstanding numbers to $112.7 billion, up from 71.7 just a year ago. Very interesting times for the company as well. They're just gearing up for the holiday season. Always exciting times for Amazon. If we move to discussing some of the operating metrics, and I'll explain why I feel like AWS is the way to go forward. Online store revenues obviously ticking up. AWS revenues starting to tick up. And you see here there was a dip in the last couple of quarters, but now it's up 17.616% revenue growth on a TTM basis. If we move on to the operating income, you see these numbers are humongous, like 60% income growth for AWS. It's just amazing. Some of the numbers for international operating income, they were kind of operating in loss for a long time in international markets. It just touched profit numbers last quarter, and ever since it's been growing. But again, as I said, this is one area where I feel like Amazon's not doing enough. If you talk about operating margins, AWS staggering numbers at 35.32%, nowhere near North American operating margins and international operating margins. But again, that being said, these numbers have a base kind of number that is way higher than the AWS margins. If we talk about geography, and I'll move this to a chart. if we talk about geography here, you see how international revenue is just stagnant. It's just not been growing at the rate that they would really want the international revenue to grow at. It's taking them a lot of investments to make in terms of companies to acquire in international markets, logistics to be set up. But overall, it's just not yielding them enough results. Granted, they do have a profit on these setups now, but in the long run, I don't feel it'll do them a lot good if they just keep pumping money into this segment and not getting the revenue out of it. On the other hand, if you see the North American revenue, as I said, it's their bread and butter. 171 billion back 4 years ago, but it's now at almost $400 billion. If we move on to the forecast, just to discuss the forecast here, very similar to very similar to Google. There's no analyst that has a sell rating on Amazon. Not very surprising. Out of the 41 analysts that cover Amazon as of this quarter, the price target for analysts would be somewhere around $234. Currently at $208, but there is a 12% upside. I see the stock to be somewhere around $250 to $300 by the end of next year. That's 2025. That concludes the earnings results, but I was, way more excited to talk about the AWS portion and how I believe that how AWS was quite visionary and revolutionary in its approach and very different from other cloud computing competitors in the space. To just kickstart things, I want to show you the companies that spend the most on AWS. This is a bit outdated, but this is the monthly spend by companies. You see some really big names there: Sony, Adobe, Facebook, Netflix, Twitter, now X, Coca-Cola, 3M, huge names. There's some other names like Robinhood, Pinterest, Yelp, DoorDash, Tinder, Hinge, OkCupid. Interestingly, there's some companies that have come out with statements in their regulatory letters to the SEC stating that if AWS services are impacted, it'll have a severe impact on their own operations. Names like Netflix, Zoom, Intuit, Caesars Entertainment, and many, many more companies have come out with such statements. Fun fact, the authority that they're reporting to, the SEC, they use AWS as well. And the website that I pulled all this information from also uses AWS. It's just become a part of our lives now. Just this graph alone will show you why I say that AWS will be the primary growth driver in terms of operating income here. The blue bars are the Amazon operating income as reported, but the orange graph here shows the operating income without AWS. And you see how there's a huge difference, especially in terms of in the times during COVID was a huge contributor to growth in Amazon's growth journey. Now, the genesis story for AWS is very interesting, and it is one that is deeply rooted in one of their core competencies, their core beliefs. I worked with Amazon, and I feel like they're very true to what they believe in, and that is to be unique. They have 6 guiding principles written in their onboarding statement when you join them, and one of them is, and I'm just reading this out: as we do things, we accept that we may be misunderstood for long periods of time. So they're comfortable in making those decisions that actually will drive growth, but are not quite understood by the general public. This goes way back in to 2000s. 2000s was a very interesting time for the space, just because the internet boom, but Amazon was growing at an exponential rate, and they were finding it very difficult to keep adding these new features to their website. It's not like today where, let's say you use Shopify, you can add or remove a feature just by the click of a button. Back in the day, for every side project, let's say they want to add a category to their website, it it had a lot of groundwork to be laid out just before you even start working on the feature. So that means setting up storage solutions in terms of databases and other computing infrastructure that the feature will be deployed on. When Amazon ran the numbers, they found that 70% of the software engineer's time is just spent building these basic building blocks. It's not time well spent for them because, again, one of the other principles that Amazon has is to be customer centric. And you cannot be customer centric when you're spending 70% of your time just doing back end work. They realized this in 2000. That's how visionary, I would say, Jeff Bezos was. He understood that this was a pain point, and in one of the investor letters, he also surprisingly comes out and says that the work that these software engineers have to do, it's undifferentiated heavy lifting and creates muck. That's the word he used in an official letter to the investors. Building features at Amazon scale is not easy, and therefore they were willing to go to any extent to kind of smoothen out the process for those engineers. 2003, the management meets at Jeff's holiday retreat house. They agree that it's worth spending money on. 2005 is when AWS went live, and going back to the statement, the guiding principle, which says, as we do things, we accept that we may be misunderstood for long periods of time. There were official analyst reports 1 year from AWS went live that says it is just a distraction and nothing else, and Amazon should stop spending money on AWS. And today we stand where AWS is treated as one of the industry's go-to for cloud computing, and almost I feel like almost all companies that I interact with on a daily basis uses AWS. And that's why I feel like they've done this time and again, where they've built products, they've built services for the customer that the customer doesn't even know that they need, but eventually, as and when they progress on that journey, it just becomes indispensable. AWS gone for a day is like billions of dollars lost in revenue, not just for AWS or Amazon as a company, but for millions of other companies around the globe. So that's how important, I feel AWS is for the ecosystem. There's another famous interview from Jeff Bezos. The reporter asked Jeff if it's possible for Amazon to replicate something like AWS. And this is just a few months ago. On a TV interview, he was asked, is there a possibility that Amazon can ever in its history replicate what it did with AWS and come out with a service that's just out of the blue, that customers don't realize that they want, but they actually need it? And Jeff's response to that question is actually what sets Amazon apart. How he answered that question is, we're not looking to replicate AWS. Our main aim at Amazon is to find the next big problem that our customer has and to solve it. That's exactly what they did in 2000. That's exactly what they're doing it in 2024. This is a great segue to the next topic that we're going to discuss, that's AI infrastructure. But before I do that, in the same interview, he was asked, what does AWS have to do with, selling books or selling furniture, selling toys? AWS has nothing to do with it. Why do you treat AWS as though it's a separate company and you're focusing more of your time on AWS? And he responded by saying that AWS has nothing to do with selling stuff, but all companies that sell stuff has to use AWS to sell them, and that's why it's important for them to work on AWS. Keeping the customer, at the center of all their business dealings and transactions yields them results, and I look up to Jeff Bezos from a leadership standpoint, just because he is visionary. He had that thought way back in 2000. It's not an easy thing to do. That was a time when Google, even Microsoft, whose Azure platform is used by 25% of companies now, Amazon AWS stands at around 40%. Companies use AWS. None of these players even thought about what cloud is. I mean, it's surprising how a company that started out as a bookstore is controlling the way we compute. It's not the Googles, it's not the Metas, it's not the Microsofts that are actually doing it, but actually a guy from Seattle who started his company from his garage that actually dictates how you compute. But yeah, I mean, overall, I feel AWS is going to see years and years of growth going forward. Before I end this particular segment, I just want to show one more kind of graph. Basically, if you look up at a graph that shows AWS operating income year on year starting from 2003, it's basically an investor's wet dream. The moment you see that, it's just nuts. Starting from zero, it's up, I don't know, God knows how many percentage points. It's just crazy. But yeah, I mean, moving on to the next topic, it's AI infrastructure. And going back to the discussion that I was talking about, where Jeff says it is the customer's next big problem that they're tackling. We don't realize how important AI is right now. A lot of us don't realize it just because we don't use it enough. But that was the same thing back in 2000. Internet was a generational shift, and so is AI. And the companies that realize this the first are the companies that will dictate how the next 25, 50 years from now is going to be. In the conference call, Andy Jassy, the CEO, put the number at $75 billion this year as an investment in AI. I could go on and on. I think a good 15 minutes on deals that they've done throughout the year on AI. £5 billion in the UK, $1.5 billion in Italy, $4 billion in AI startups. I mean, the list goes on and on. They're just spending left, right, and center. And I believe at this point in time, keeping in mind that all these companies are doing their own bit to kind of stay ahead of the game. And I'm very cautious when I say this statement. I feel that the company that throws the most amount of money at this problem will eventually win. Because all of them use the same kind of infrastructure right now, just because they have to rely on a chip maker, they have to rely on their engineers. It's not like there is a dearth of talent. And it's not like, their hiring practices are going for a toss. They will spend a lot. $75 billion a year will take a hit on the capex, will take a hit on their free cash flows. But the companies that are willing to do that will see the returns in future. And that goes without saying for even companies like Google, companies like Meta that we'll discuss shortly. All of them are willing to spend more. But why I feel that Amazon has a bit of edge over the other competitors is because Amazon has done it in the past. They've built services from ground up, from scratch. When there was nothing like cloud computing, they've built AWS. So for them to come out with a statement saying, "Okay, we want to be the leaders in the AI space," I mean, it's not a very difficult thing to digest, just because they've had experience. The legacy is there. They have learnings from that experience that they can put into this segment as well. Before I move forward, there is a misconception in this space where people often misunderstand what AI chip is versus an AI model, and why Amazon is way different than Meta in terms of investments in AI. Amazon invests in AI chips primarily, whereas Meta would invest in AI models. So basically see it as hardware versus software, where AI chip is the hardware, and the AI models, the LLMs, the large language models are the software. An LLM like a chat GPT will interact with the end user. Let's say you wake up in the morning, you ask chat GPT, can you give me a recipe for a healthy breakfast? Now, how does chat GPT know what a healthy breakfast is? Because it is trained on millions, billions of text, images, videos that it has to go through to kind of know and understand what a healthy breakfast is. That heavy lifting is done by the AI chip. Now, it is no, kind of secret that all players heavily rely on NVIDIA chips from Google, from Meta, from Amazon. What Amazon's doing is it's making its own chips now. So Amazon has its own set of ARM that is dedicatedly making AI chips that will train their own models for processing, which will result in decreased reliance on NVIDIA, improved cost efficiency for Amazon. Just to give you a few numbers, AI chips are of two kinds. The chips that are like, you could say, low quality and higher quality AI chips. Amazon has two kinds. One is a non-AI chip called Graviton. It's so advanced, it's already in its fourth phase. Each phase takes around a year to kind of improve and get better at it. So they're in the fourth phase. And then there is the AI chip, the Graviton that they call it. And that's their high-end flagship AI chip. The recent Prime Day sale, they used 250,000 Graviton chips and 80,000 Trainium chips. That's what the AI chip is called, Trainium, very aptly named. But those combined chips made them $15 billion in sales. They were there in place to handle the surge. That's there every Prime Day. This number will only go up. The number of AI chips will only go up. It's just amazing what their chips can do. Obviously, the NVIDIA chips, the H100s, the other chips are way more advanced in terms of the capabilities that they have. They can process better. But I believe that it's just the start of something new for Amazon, and with the amount of money that they're pumping in, they will only get better at it. They're also doing these investments in smaller AI startups that primarily work on large language models. For example, there is a startup called Anthropic. Amazon already has invested $4 billion in March. They're again going to invest another $4 billion, I think next month. But one of the conditions for that investment is that Anthropic now has to integrate and use AI chips from Amazon, the Trainium chips, in their workflow. So slowly, what Amazon's doing is they're kind of forcing, or if you want to be very crude, kind of bullying these companies to start using their products and slowly transition away from NVIDIA chips. There is a business learning in this, in the sense that if you see why Intel, and if you analyze why Intel failed as a business, they stopped selling to other customers, like to other manufacturers. They stopped being the primary point of contact for chips. NVIDIA took that position. What Amazon's trying to do is the same. They want their chips to be the primary driver of growth for LLM models going forward. And I see this done brilliantly by NVIDIA when they replaced Intel. And it won't be very surprising if I see Amazon chips replacing NVIDIA in future. Very, very crass statement to make at this point, but I do believe that there's potential. There is a lot to learn from Amazon in terms of how they use those learnings from past experiences to make things better, and do that on a recurring basis. So I believe that AI investments that Amazon's going to make in 2024 and 2025 will be primarily on these AI chips, and it is only for the betterment of the whole industry. I feel there is a level of I want to do good for the society. I want to do good for customers, again, being customer centric. That's very important for Amazon. And I feel that's the thing that's driving this investments as well. But yeah, that's about it for the fundamental side. Be very interesting to see on the charts how it looks.
Thank you, James. Yeah, it was interesting to see. I was watching an interview with AWS CEO Matt Garman. It was on the Wall Street Journal, and one of the most important aspects of their future outlook on how AWS is integrated and its major value proposition is its focus on security. So there was a couple aspects that were really interesting in what he was saying. One was that security is embedded into every process within AWS, and their customers can trust them, and they have measures in place that, for example, they were mentioning the issue with CrowdStrike, which happened very recently. So it wasn't really a security issue, but it was a deployment issue. So a part of their security protocols is ensuring operational efficiency to ensure that when companies are looking to enhance, update, and upgrade, they have checks and measures in place to ensure that the deployment doesn't just go full 100% in case there are issues that need to be addressed. So that providing that sort of security to their customers, providing that peace of mind that the operations is very much focused in on, is exactly what the AWS CEO right now is focusing on, as well as building on the legacy of Jeff Bezos, because they're listening to their customers. He's the one who coined or has used the phrase, we're customer obsessed. In interviews back when it was Amazon.com, he would be grilled for some of the things that he was doing. And he was very, I would say, humble in addressing the concerns, addressing the pain points of his customers as his primary focus of how he would answer the questions. So it just seems to be continued within, succession, and the new CEO is very much focused on that. And the other aspect is that they, from the AI aspect, he was also touching up on how, with the success of ChatGPT, a lot of these other companies were like rushing to create their models and get something to market when ChatGPT was incredibly successful and has still been obviously so successful with their new versions. But he was mentioning how it is a misconception that Amazon isn't focused on AI. They would just rather do an excellent job. They're really looking at how they can be the best at AI, even with all the successes of ChatGPT. They don't want to just put something to market, a model that isn't as good. And one more thing that I wanted to add, which was really interesting about what he was saying, is that it was originally thought that there would be, the best of a kind of a model. This model would succeed in this industry. This model would succeed in this industry. And his strategy for AWS has been that we see a future where different models will perform different tasks, and they will be exceptionally well at doing specific things within AWS. So they'll use a variety of models, and it reduces operational risk. It provides competitive edge, but more importantly, like AWS is succeeding, and the 20%, close to 20% growth still is amazing. And ever since I could remember purchasing, a product from Amazon.com, the US counterpart, I realized that, okay, they're doing something here that is so enjoyable for me to experience because I want the product and I can get the product. And once they started expanding globally, and now that, you have like same day delivery, prime delivery, all these other value added tools, it's like, there's no reason why they can't continue to succeed. And it all starts with being customer obsessed and understanding what the businesses need. And, you touched upon that, the way Jeff Bezos answered that.
Yeah, I mean, in one of the filings, I think it was reported that they now cover, I think, 90% of the US with same day delivery. That's a number that, you can't even think about maybe 10 years ago. It's just same day delivery for stuff like even medicines, right? To rural areas where there's literally no chance of getting these life-saving medicines at such short notice. Amazon can help you do that. That's like amazing. One more point I was just thinking about it. The current CEO, Andy Jassy, he is the ex AWS chief. So it's no, kind of surprise to me that, Jeff chose this guy for the job, because he knows what it takes to kind of build a new service the same way that Jeff did with Amazon, a new service from ground up to reach new heights. I mean, it's just amazing what Amazon is currently doing. Yeah.
Perfect. Yeah, I agree. So let's dive into the charts here for Amazon. And this time I'm going to basically start off with showing the Amazon chart, but I'd actually like to go over the market just to sort of see where we are in terms of alignment here.
Yeah.
So this is the Amazon daily chart, but let's actually go to the S&P 500 here. So overall, it's been an exceptional week for the market.
I see that.
Multiple gaps and just a continuation on the upside. But, looking at the markets overall, there's a lot going into why I believe we're so bullish. One major reason is obviously how the investor sentiment is around this presidency. We can see that the market is eager to see growth in the markets. Investors are happy to some extent based on anticipation for upcoming volatility. From the investor side, they see growth, they see better policies, they see a better business climate, better relations on an international scale, with reducing conflict. At the same time, day traders, they are seeing sort of like a hint into the future based on the past, where a simple tweet from Trump would result in major market moves. So the volatility is appealing and is exciting to anticipate. But at the same time, this is also a sign that, okay, the market's going to go up. And some investors are also considering that, the markets can still pull back and take a dip before they continue to make all-time highs. So don't be surprised if you do see eventually a pullback, a healthy pullback, and then a rip towards the upside. So I want to show the S&P 500 chart here because from the monthly down to the weekly, just strong green candles on the upside. They're taking over not just 100% of that move, they're going 200%. And as soon as you see a pullback to a key level or to, like, for example, the 570 level here on S&P 500, this is the ETF. And if you see it's bounced off the 20 moving average. So there's a lot of buying interest. And, for me on the sidelines, I was not expecting such a major gap, another gap, and then a gap up and continuation. I thought there would be some pullback, maybe to 585. But, this is kind of giving me as a trader and other investors the indication that, okay, the market's 70% of the time going towards the upside. It's designed to be going up to some extent. But now it's very clear that, the bull market is going to continue. We might see pullbacks, but the market is just super eager to get buyers. I think they were saying that the amount of money that's been poured into the markets ever since the presidency was announced was just historic. And you're seeing Bitcoin as well reaching new highs of like 80,000 plus. So overall, investors are very confident. I think Trump has a huge opportunity that he's come into the scene at the right time. And yeah, I think it's important to anticipate volatility, look for good price opportunities, and this is what the market's basically showing us. So a strong move up. Now, this is the 1, 2, 3, fourth candle here on the daily. It can do a fifth candle, maybe even a sixth. It's not likely, it's not very common. So just be cautious if you're doing some day trading overall in the markets and you're expecting it to continue. But it could happen, right? There's no guarantee that it won't happen. But there is a possibility that it might still pull back. And we're basing our strategies and the way we trade based on past price action, statistical probability, what's more likely to happen, but don't be married to your bias. Be willing to adjust and be flexible as well. So just wait to see what happens after this long weekend. It is November 10th, 2024. So, we're going to have a holiday here in North America on November 11th, and we'll see what the markets decide to do on Tuesday. So going actually straight into Amazon and with the ticker AMZN, this is incredible. Like, you see that there are critical levels, and we're just going to go ahead and start on the daily because we're here right now. Based on the way that I have traded and understood how the market works, aside from knowing on the fundamental side and hearing the incredible insight that James has as well, but the technical side paints a picture that reflects the numbers for the most part. And this critical level here around 200 to 201, look at the commitment on this candle here. As soon as it opened around, what is this here? An opening of about 200. That's a key psychological whole number level. It just broke through. So this was here on 11/06/2024. And we can sort of anticipate and see that this was going to happen to some extent because buyers were stepping up. We were getting gap ups that were being sold off a little bit in the red, but it was holding even the 195, 196 level. So based on what I see here for Amazon, if it's not already clear, I'm very bullish. On the short term here, we're looking at short term. I usually go on the higher time frames and build it down to the smaller time frames, but it's very bullish. Now, this is a sign here that, okay, there's a red candle. Maybe we might get another healthy pullback, maybe a candle or two. That is completely fine. If you're looking to swing trade this, you can still enter here around 204. Look to break the all-time highs here around 212.25. But let's sort of zoom out as well because we want to see what investor sentiment is and what the opportunities are on the longer time frame. If you're looking to invest, 2 years, 5 years, 10 years plus. So I'll go straight to the monthly. So the monthly chart right now, it is showing some overlap, but this critical level here around 190-ish, we broke that level. We're starting to consolidate here. We had some sell-off happening, and check out this. It's a red candle showing that it's bearish. That's where sellers are coming in. The reason why I anticipate this occurred was because we didn't really break out of this level here around 190. It slightly broke out. And when we get a weak breakout, it's an indication that, okay, maybe it's not as strong as you think it is. But when it did sell off here on this monthly candle, it immediately got bought up. Now, whether this happened during the first week of the month or in the last week of the month, we can just boil down to the smaller time frames to get a better understanding. But just the theme here is we did make a relatively smaller new high. It came and pulled back, but buyers stepped up. And now it seems like buyers are in control. So the monthly is looking very bullish. And of course, I like to use the moving averages here. So it's definitely above the 200 moving average, which is the purple line, the 50 moving average, which is the gray line, and the 20 moving average, which is the blue line. So going into the weekly here, again, very bullish. If we're looking at it from a technical standpoint, we can actually remove some of these levels here. Some of the patterns that are very common in day trading, but also work on swing trading and investing is bullish flags, bull flags, breakouts, and usually you can use a nice trend line to identify this. So if you look right here around the 201, 202 level, this is an area where it broke out. Now, one thing that I want to note here is volume plays a big part in technical analysis. This candle here had higher volume than the one we see here. We can just see the volume right here. Now, what I'd like to see is if it's going to pull back for next week, or if it's going to have more continuation to the upside, I would want to see more volume kick in if I'm trying to get a short-term move. But if I'm waiting for a longer-term move and I want to find the right entry, buying around above 200, That'd be a nice spot, but I want to see it go a little bit further, make a healthy pullback. And what that's called here is a breakout and retest. So I can actually draw that on here. So it would break out, come back, retest this level, establish some strength, and move higher. That's what you really want to see in the markets, because once you see a breakout or retest, according to what I have been understanding of technical analysis, this area right here, and I'll just mark this here with a little square. This area here is actually one of the most safest, if not the most safest places to buy on the chart, because buyers have committed. It's a healthy pullback. It's not getting below this level. If you're seeing price action around here, this 200 to 205 range, and you're looking to make an entry on Amazon, see if you can look for a breakout or retest. Of course, I can't predict the future. I'm only anticipating what I'd like to see. And I want to see some sort of breakout or retest. And if I miss this opportunity, that's fine. I'll wait for another pullback. But overall, the sentiment on Amazon is very bullish. We're going to go back to the daily, and I'll conclude this segment of the technical analysis. And when we zoom back in, this is potentially what we could see. Of course, this is much more exhausted than what I wanted to see from the higher time frames, but we got a major breakout above 200 to 202 plus. Let's see if it continues or pulls back. And Amazon, as well as tickers that we've covered in the previous weeks, such as Apple, Google, and even Tesla, they do work very in tandem with the market. Sometimes they may work in opposite areas. Of course, we saw Tesla, very weak before all of this Tesla bullish price action occurred. And this has something to probably do with the presidency as well. He's a big supporter of Trump.
Yeah.
But overall, we see that these major market players, Nvidia, they are all in sync with the market. So you want to be in sync with the market. The market seems very bullish. Amazon seems very bullish. Wait for the right entry. You don't have to capture the move before it breaks above high of the day. It's better to be patient and try to capitalize on the move if you're looking to invest, if you're looking to swing trade, and if you're looking to day trade. Just remember this. You have to look at the average trading range as well of a candle. This candle here goes from about 199 up to about 207. You could say give or take. This is a $10 candle. We were not averaging $10 candles. So this is a bit of an outlier. So you want to expect that the moves will be between $5 to $10 on Amazon. So if you're looking to make a day trade or swing trade, keep that in mind. So in sum, very bullish. I like the price action from Amazon. The company overall is one of my favorite companies as well. I personally have really appreciated the commentary and feedback and vision that Jeff Bezos has left. He's on to bigger and better things with Blue Origin. But of course, Amazon's a company that's here to stay. It listens to the end user very well. AWS is the future. It has a huge market share. It has the advantage. It's growing 20%. There's no reason why this chart wouldn't replicate that. And just make sure you get the good entry, because that will be essential to ensure you get the best price entering into Amazon for the long term. We really appreciate you tuning in on another episode of Epic Markets. This is Babar Trades World.
And this is James Invests.
If you found value in this video, make sure to subscribe.